Gold's safe haven appeal is yet to kick in. The precious metal once again failed to hold the 1800 an ounce level, and that's despite high volatility in the US stocks triggered by Omicron fears. Here's a look at Kitco's top 3 stories of the week. At number 3, Federal Reserve Chair Jerome Powell and Treasury Secretary Janet Yellen testified before the US Congress. Powell shocked the markets when he finally chose to retire the phrase "inflation is transitory." He explained that the risk of more persistent inflation is now higher, with the Fed failing to predict the supply side problems. Powell also triggered a sell-off in both US stocks and gold when he said the US Central Bank would introduce a more aggressive tapering schedule at the upcoming December meeting. Yellen, in the meantime, maintained that the US stimulus package was only a small contributor to higher than expected inflation. At number 2, central banks are once again buying gold, and inflation fears might be the reason why. The big news this week was the Central Bank of Singapore buying gold for the first time in 2 decades, and increasing its gold reserves by 20% this year. Singapore's gold purchase went largely under the radar as the central bank bought more than 26 tons of gold between the months of May and June, boosting its total gold reserves to over 150 tons. The Irish Central Bank also added to its gold reserves for the first time in 12 years, buying 2 tons of the precious metal. And coming in at number 1, this will be a decade of shortage defined by high inflation and a failed attempt to raise rates, which will be the perfect combo to trigger a massive rally in gold, Goehring Rozencwajg Associates Managing Partner Lee Goehring tells Kitco. He sees gold hitting $10,000 an ounce and silver reaching $500 before the end of this decade. The reasons behind such a bold outlook are shortages in everything and high price pressures, which could trigger a black swan event. Goehring says, "We could be looking at a black swan event in inflation. It could be an oil shock, natural gas shock, or agricultural shock. And the Fed will have to give up on raising rates because it will be too painful for everyone. This will be the start of a massive bull market in gold." That's a look at our top 3 stories of the week. Thanks for watching. Don't forget to subscribe, and for more headlines, check out Kitco.com.